While the Fed is working to be more transparent, this next guest tells us how their mixed signals are affecting the market and what data points we should be watching to get a better read on things right now. People United Advisors Chief Fixed Income Officer Karissa McDonough tells us more. So, Karissa, I want to start with something I talked about yesterday, which is wage inflation. And we showed a chart about how many times people have been talking on earnings calls, management, about labor costs, and it is going up. And then we get CPI, and there's like no inflation. So how is there seemingly no impact from wage inflation on total inflation?
Well, that's an excellent question. That's something that we've been struggling with, too. Often, you see a one-for-one impact when you see wage inflation creeping into total inflation. But a hallmark of this particular recovery is that so much of the wage inflation has not crept into the rest of that inflation measure. And it might just be that labor's share of profitability has shrunk over the last market cycle during the last 8 to 9 years, and we're just now starting to see that recover. So the good thing for the Fed is that they can have their dual mandate of unemployment and inflation, and they can support stronger unemployment, and yet it's not going to lead to an inflation scare where they're going to have to really hike to react. So, in fact, it presents a really good opportunity for the fixed income market. It's kind of a Goldilocks environment at this time, where from several Fed speakers we've seen, they are going to let inflation run, and it doesn't appear that any sort of inflation shock is on the horizon.
Hey, Karissa, it's Brian Chung here. So I'm just curious, we are getting an FOMC meeting next Wednesday, and what are you going to be listening for? We know that the Fed is going to be patient. They've messaged that they probably will be patient and not raise rates, at least for the first half of this year. So what are you kind of dialed into?
Well, the things that we're really looking for, the things that were somewhat of a surprise is that they are saying that balance sheet normalization, the runoff of the Fed balance sheet, is actually closer to being done than what we had originally seen. So we'll be looking for more details on that process. The other thing that we're looking for is the dot plot, the economic projections. That seemed to be something that was under potential changes. So we're going to see how is the Fed going to message future rate hikes when they're not really willing to put that out there in a specific dot plot if they want to move away from that. So I think the messaging mechanism of the Fed is always under advisement. It's always changing. And Powell has been at the helm for some time now, and he's always refining that messaging. But I think that's something that we need to continue to watch. In the interest of increased transparency, I think sometimes that leads to mixed messaging for the markets, and the bond market in particular is really trying to understand what the Fed is coming to terms with at the end of this market cycle. One other thing I would add, you had talked about inflation and unemployment. Something else that we look at is actually financial market stability. We like to think of that as the shadow third mandate of the Fed. That was never anything that was really specific in terms of what they had followed in the past, but it's become clear, especially over the last 6 months or so, that they are very reactive when the market is reactive. It's kind of a virtuous cycle. So when you start to see capital markets getting concerned about Fed policy, the Fed actually ended up caving here in the first part of 2019 to the reaction that we saw in October. So we would expect to continue to see that reaction back and forth.
And Karissa, kind of to bring it to a mainstream focal point, we know that Powell was on 60 Minutes over the weekend, and when you think about what that signals or what kind of symbol it has to perhaps the average American, does that give you reason for concern? Because typically it's not necessarily that they're stretched for guests to have on, it's more to appease folks saying that a recession is not coming. What did you make of the interview?
Yeah, I think that that's just another way that Powell is exploring how to get the message out to various parties and various segments. You're right. It doesn't sound like it's a normal strategy for the head of the Federal Reserve to be, doing interviews on 60 Minutes. But again, I think he's exploring every avenue, understanding, again, I think if I have one main point to make, it's we're at the very end of an extremely long market cycle here, with a relatively new chair of the Fed who's trying to feel his way through in terms of messaging. So to the extent that he can be clear and bring his message directly to the American people, I think that that's part of the strategy. Again, if he can ensure some degree of additional stability in capital markets during this transition, that'll make his job a lot easier. Again, the reason that they're really focused on that capital market stability is that's an important input to economic data, and anytime that access to capital, access to liquidity gets shut off, that flows directly into the U.S. economy. So yeah, I think he wants to be heard directly and without necessarily the filters of Wall Street. That may be the case.
We'll be hearing from him soon. People United advisors Karissa McDonough, thanks so much.
Thank you.